I see a trend change taking place as of today. As the stock market pulls back, gold is going to shoot higher.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for August 4th through August 11th, 2025, while supplies last. First this week, backdated 1-ounce Canadian silver maples are just $2.89 over spot, the lowest premium we've seen on maples in years. Next, backdated 1/10-ounce Platinum Britannia are only $34 over melt per coin. Backdated gold 1-ounce Britannia are just $59 over spot per ounce. And finally, 100-ounce PAMP Silver Bars are only $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Thanks for having me, Elijah. Always a pleasure.
Well, it's great to have you today, and I wanted to speak to you today about really a shift that's happening both in the stock market right now and the gold market. You're really looking and saying that the stock market could really be topping at the moment, and we could see a major crash ahead. And for a trade, obviously you're looking at in a kind of short-term trades here, you're looking back at 2008, what happened during that, or 2007, 2008, what happened during that time. There's a time when gold rallied right when the stock market was turning over, and you think we might be seeing a reset of that or a repeat of that again right now. So can you expand on kind of what you're seeing?
Yeah, so the best way is if I share my charts and I kind of draw on there so you guys can visually see that. So let me pull that up. Let's take a look at the 2008, as you said before. So I have the chart of 2007, 2008 here on the left-hand side. Now you can see at the bottom it says 2007. The candlestick chart, the red and green, is the S&P 500, and it had moved up to some all-time highs. It had a bit of a pullback and correction, and it rallied back, and it made a new all-time high, poked to this level. Now, gold is the yellow line. Now, gold was rallying up and had a very significant run leading up to this. In fact, gold was one of the top-performing assets, even though the stock market was at all-time highs. And what happened is the stock market started to sell off. And if we look at what happens in 2008, if I was to just start to zoom in a bit or scroll forward, you can see the stock market started to sell off. Gold kept pushing higher. And as the stock market kept moving lower here, gold kept shooting higher. It had a very dramatic run to the upside as the stock market fell. So the stock market fell fairly substantially, fell about 20%, and gold just kept on shooting higher. Well, if we kind of look at where we are today, we had the stock market put in an all-time high earlier this year, and then it broke through and put in this nominal new mini high, just like over here in 2008. At that time, we can see gold has been pushing higher. Gold has been one of the best performing assets going back, many decades. It's performing better than almost everything else because it's pushing higher. And I believe the stock market is very close to, or maybe has even started to roll over and might go into a bigger sell-off. And if I was to just zoom out here, the 2007, gold shot higher as the stock market had its first pullback. And I think that's what's going to happen. I think the stock market's about to pull back. As you mentioned, I see a trend change taking place as of today. And as the stock market pulls back, gold is going to shoot higher. But what happens over time is the stock market goes into this huge financial reset and it sells off in a very big way. We saw the stock market fall 50+%. Gold shot higher. Eventually, gold will come under pressure. When a full bear market and recession hit, almost everything kind of gets pulled down with it just because of margin calls, and people get scared. They even sell good investments, and it'll pull the price of gold down. So I believe we're going to see the stock market sell off and gold go higher. And the best really is the visual of the gold chart. Let's look at actual gold futures here. And if we look at the daily chart, this is a very, very beautiful chart pattern. We saw gold put in this big consolidation after it hit one of our Fibonacci targets at 2750. It went into a multi-month pause, which is a good sign. If I actually zoom out here, the gold goes in this series of bull flags. You mean you get a rally up, it pauses for a few months. It rallies up, it pauses for a few months. It rallies up, it's been pausing. This current pause in bull flag pattern points to much higher pricing. based on the strength of this run and the pullback that we saw, it shows that gold should run to 3,720 is the first stop once it breaks out here. Then it's going to about 4,100. So there is percentage-wise a pretty juicy return for gold. 8% is a big move in gold. Obviously, potentially like 18 or so percent if it runs up and hits that 100% measured move. And this bodes or coincides with what's going on similar to 2007, 2008. And it doesn't matter what the cause of the market crash is. The stock market does the same thing each time. Whenever people or investors are fearful, they sell assets. And it doesn't matter if it's a tech bubble or if it's a housing bubble. I mean, one's all digital that caused the crash. One's all the housing banking base that caused the crash. Again, who knows what it's going to be this time. But when people get scared, they sell off and they move to safety. And near term, gold is that safety play. And it is about to rocket higher and put in some pretty decent gains. So that's kind of that angle from where I see things going right here.
And what do you anticipate silver doing in this environment?
Silver's a noisier chart. Silver should move higher as well. When you look at this chart, it is much more random. It really is just really shaking its way up. It is in general trending higher, series of higher lows, higher highs. That's the definition of an uptrend, but it's really noisy. Percentage-wise, I actually think gold has more potential for more upside here. I think we're more in a scenario where gold is actually going to perform better because I think globally, big investors want to move into something that's somewhat stable. Silver is very volatile, and so a lot of people don't want to put their money into something that's really volatile that can lose, 20 or so percent in a heartbeat, as we saw just back over here. We saw, in really just a few trading sessions, silver fell 22%. So that's the problem with silver, is it doesn't attract big, huge money in a lot of cases. Investors say, I'll just stick with gold because it's steady. So I do think silver is going to want to go higher. I think the safer play, the less volatile play with more upside potential in this case is actually gold. But again, I think we'll see silver move higher. What's really interesting here is if we look at silver miners, let's look at SILJ. It's not breaking to new highs. It's pretty noisy. It's had a nice rebound in the last few days, but again, it's a pretty ugly chart where if we go and we look at gold miners, they have a much cleaner looking chart. It tends to move higher and pause and rally and pause. And it is building a stronger base, showing that it wants to go higher in a more controlled way. So I think everything linked to gold is the better play. I think if I was to buy physical metals, gold is the play. We're actually looking at getting into a GLD or a gold ETF. Just for this trade, just for this 8 to 20% move that could happen in the next 1 or 2 months, or even sooner than that, to be honest. So I like gold here as a play over everything else.
And platinum has also had a huge move this year, about 40% or so. Do you anticipate platinum also rising? It's a little interesting scenario though, because it's more of an industrial metal even than silver. So not much of a monetary metal there. So what do you anticipate platinum doing here?
Yeah, so when we look at the chart of platinum, it is a pretty ugly chart. It has been really trading sideways really since 2022. It's really been in this sideways base, a stage 1 base. It's clearly broken out. It started an uptrend, but overall, I'm not a fan of something that goes straight up. You and I think, talked about this not too long ago, has this running correction. It's very volatile. Usually it ends with a very abrupt sell-off and crash in price. And that's kind of what it's doing. So it needs some time to build a new launch pad, meaning if I was to just zoom out to this chart, what we need to see it do is pull back and trade sideways and build some type of bullish pattern that's going to give us an upside target going forward. It may want to correct further down. This type of move, something goes straight up with this running correction I talked about, unfortunately, a lot of cases, it'll give back almost all of that very quickly. And then it's got to restabilize. It's not the best chart pattern. If you were long and you caught this explosive move, perfect. I would close the trade out, lock it in, and wait for a new opportunity, because right now it's just a coin toss for it. The play here really is physical gold, in my opinion, over the 3 metals.
You mentioned some action maybe in the mining stocks. Can you expand a bit more about that? A bit more on that?
Yeah, so if we look at the mining stocks, I'll look at the GDX, which are the large caps. I like physical gold and I like the large caps more. The other chart I pulled up was the GDXJ, and it's the juniors, and I generally don't follow that. I clicked on the wrong one. GDX is the one I like because it's the larger cap tech or gold stocks, and it's already breaking out. And this is a very good sign. Usually if miners are leading the way, physical gold will follow. And so we have miners now breaking out, people are moving in, and that usually means we're going to see gold pop and rally. And, that's the place to be as soon as you go to the smaller things, you go to silver, it's a small market, it's volatile. You go to silver miners, or even gold juniors, the charts are ugly and they're volatile. But if you stick with big gold, like physical gold and large caps, you get much cleaner price action, more probability or higher probability of winning. And so this is a bullish sign that we're seeing the large caps really start to move and take advantage of this. I think this next big move in gold.
You mentioned how it doesn't really matter fundamentally what happens maybe in the economy, but these are really just chart patterns that you're reading here. Can you talk a bit more about this? Because obviously people are looking a lot at what's happening geopolitically, and that's bullish for gold sometimes. But when it comes to just the chart patterns itself, it seems like that's the main thing you're reading here.
It is. I mean, that's what I do. I'm a technical trader, so I use technical analysis, which means I look at price action. I look at various different asset classes, momentum, things like that. And I look at the markets from a technical point of view. And I don't look at it from what's going on in the news, what is the Fed doing, what's going on with tariffs, economic data. None of that comes into play. The reality is the only way us as investors in whatever it is you're investing in, we need price to move in our favor. It doesn't matter what the news is or what the stories are going on. Is that asset moving up? If it is, we want to hold it. If not, we don't want to. So I really step back and I get rid of all the noise. I haven't watched the news for about 12 years. I don't read other people's opinions. I really just do my own thing. And I find that is the best way to navigate these markets. As soon as you listen to news or listen to somebody else's opinion and that has a totally different strategy, you start to second guess yourself. And I follow what the markets are doing, the price action, using just a proven method. And, that to me is the best way to pull money out of the markets, hold assets going up, avoid assets that are going down, and be able to time big moves in the gold and silver and pretty much any commodity or stock in the markets going forward. So, yeah, it's a great way to do it. Very different than people who are glued to the screens listening to social posts and what's going on with everything.
It sounds like there are, I guess, scary times ahead or potentially scary times ahead in the markets here. Those who are invested heavily in the stock market should probably watch out here. So what is your insights for them and people who might be invested in the stock market, or just how do people keep a level head when these kinds of dramatic events happen?
It's tough. The number one problem are emotions. People get emotional in the markets, and I'll show you some interesting things that are unfolding. And I think you and I kind of talked on this just before camera, that there's a trend change taking place. So this is the QQQ, the daily chart. This is my strategy that uses technical analysis. It tells us when a trend has changed, when to get out, so we can avoid market crashes or benefit from them. It tells us when a new trend has actually picked up and has power behind it. We recently closed out our QQQ trade. In fact, our trend strategy exited as this morning at the opening bell, just before the market sold off, and we're coming into potentially another downdraft in the market. This is based on technical analysis. This chart on the right-hand side is based on sentiment. It tells us when big money flow and people are panicking. Red means danger, blood in the streets for investors who don't know what they're doing. They're going to hold and lose a lot of money. We turned this corner not too long ago, just 3 sessions ago, and it's giving us that deep red, telling us, hey, there is some big shifts going on in the market. And what's really interesting is we have this trend change in the NASDAQ. Now, the S&P 500 hasn't changed its trend yet, but it's very close. We're still long the S&P 500. But check this out. So I was looking at this bottom chart is of 2024. This is last year. And the top chart is the NASDAQ for this year. Very similar. You'll notice the market put in a bottom back in earlier in the year, and then we went into this big long rally both years, and we just had this trend reversal just like we did on the bottom chart last year, and the market sold off 15%. I think what we're going to see potentially here is the market sell off and gold shoot higher, which you can benefit from falling pricing. You can bet on rising gold, probably rising volatility if you're a short-term trader and you like the VIX. So we're coming into this very unique scenario. And if it plays out like last year, we're going to see a pretty steep correction. And as you just mentioned, Eliza, like what should the investor do? They should have a game plan. If you can't see this trend change coming, then you don't have a strategy. You probably might not have a game plan, but you better have something, because if the markets do correct 15%, it might just be a sell-off, and then we go to all-time highs again. But based on the scenario of what's going on in the markets from a bigger picture, larger trends, more data, it says that any one of these pullbacks now is going to be the start of a next financial reset. And you need to be prepared, because it will wipe you out in retirement or close to retirement. There's nothing worse than giving back 20, 30 years worth of life savings and growth, giving that back in a year. Bear markets are violent, they're quick, and they wipe people out very quickly. And so we have to look at every pullback as if it could be the start of something big that is painful, huge losses, and could take 5, 10, 15 years to recover from. It's way better to be planned and execute and move in and out to make sure you're not caught on one of those bear traps than it is to stay in it and then lose half your money and be like, well, I've lost so much, I can't get out now. I'll just ride it out. And then you're stuck wasting time. And that's the biggest thing, is people will ride out these bear markets. The most valuable thing we have is time. And like, people will waste 5 or 10 years every time there's a bear market with no return, and go through that whole emotional roller coaster where we can completely sidestep it. Our strategy allows us to do that. We did that in COVID. We got out just as it was starting to roll over. We profited from the collapse. We got back in at a lower price. It doesn't matter if it's some COVID crash, a flash crash, a bear market that takes years. Technical analysis in this strategy allows us to walk through the markets with a calm, clear strategy that allows us to sleep at night. And we're at a key turning point right now. Is it a little pullback? Is it a massive one? I don't know, but you better have a game plan.
Definitely. Well, we really appreciate your time as always, Chris. If our viewers are interested in learning more, they can go to thetechnicaltraders.com. That'll be linked in the description of this video. Any last thoughts before we let you go?
No, I think we covered it. I really appreciate it. And yeah, people want more insight, they can go to my YouTube channel as well, The Technical Traders, and see these videos in detail in the mornings if you want to be caught up on the markets.
We'll really appreciate it as always, Chris. Thank you so much, and God bless.
Thanks, Elijah. Take care.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 4th through August 11th, 2025, while supplies last. First this week, backdated 1-ounce Canadian silver maples are just $2.89 over spot, the lowest premium we've seen on maples in years. Next, backdated 1/10-ounce Platinum Britannia are only $34 over melt per coin. Backdated gold 1-ounce Britannia are just $59 over spot per ounce. And finally, 100-ounce PAMP Silver Bars are only $1.89 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.